Robinhood stock is down almost 15% today on an earnings miss. But if you dig into the numbers, there's actually a crypto story hidden deep. Not only that, we have Kevin Warsh clearing a major hurdle here with the Fed. The Clarity Act not going to happen. And Paul Tudor Jones saying that Bitcoin is the best inflation hedge. We're going to dive into that and more right now. Let's go. What is up, everybody? Welcome to the Daily Wolf on Yahoo Finance. I'm your host, Scott Melker, also known as the Wolf of all streets. We've got 15 minutes with me where we're going to dig into the biggest stories in macro and crypto, tie them all together, and figure out what actually matters. We're going to do that right after you follow me at Scott Melker, right down there on X. So the first story, we can view it as a little bit of breaking news here. We have Trump Fed pick Kevin Warsh clears key Senate hurdle, teeing up final vote. You remember this guy, our new Fed chair that's worth billions of dollars, Daddy Warshbucks. It's our new name for him. To be honest, though, that one's a little dated. It's a little bit Scarface and Annie, so we made this one. Young Daddy Warshbucks. Anyways, we know that now he's cleared this first hurdle, getting out of the Senate Banking Committee. It sent Elizabeth Warren, the head of the anti-crypto army, into absolute hysterics. She thinks that he's a Trump sock puppet. You remember all of this. But it seems like a shoo-in that Warsh is likely to become the next Fed chairman. That means that this may very well be the last FOMC press conference that we ever see from Jerome Powell in just a few hours today. Powell will be out, but we may never get these meetings again from Kevin Warsh because he thinks that they're nonsense and thinks that Fed governors should keep their mouths shut and stop talking the markets in both directions. Now, you guys know that at this point, the FOMC meeting is effectively the Super Bowl of markets. Jerome Powell trounces out on stage, and you go short if he's got the briefcase in the left hand. You go long if it's in the right hand. If he sniffs or scratches his nose or winks his eye lovingly at his wife, markets literally react to these kind of things. So I think it's good news that we're no longer going to have 75 speeches a week from Fed governors and have to watch Jerome Powell try to compose himself and analyze every single word. It's going to be a new day at the Fed. We have a pro-crypto Fed chairman who holds over 30 crypto assets. This is probably going to be good for crypto markets in the long run. Now, getting to what we talked about in the intro, I think this is the most interesting story of the day. Bring it up right here. Robinhood stock slumps as Q1 earnings miss. Analyst estimates amid 2026 crypto slump. You can see the stock right here getting absolutely slaughtered, down 13.61% today. So obviously this is being billed as an earnings miss by Robinhood, which is a very easy story to see why the stock would be down. It probably won't last. But the real story to me is when you dig into the numbers, what actually happened here. They had a 47% drop to $134 million in Q1 crypto revenue. A 47% drop in crypto trading revenue. We know that Robinhood's been long the tip of the spear for meme stocks and for degenerate gamblers and speculators to go bet on their favorite assets, and crypto has been a huge part of that. But the bigger story is not even the loss of 47% of their crypto revenue. It's the fact that their total revenue is actually up 15% to $1.07 billion. And what filled the crypto hole, pray tell? It was prediction markets. Now, I don't often get the opportunity to throw an alley-oop off the backboard to myself and do a reverse 360 dunk and swing my legs over the guy's head who's hanging under me on the rim. But I'm going to go ahead and do that right now because I've been talking about this for a very, very long time. I even wrote an article about it back in December. When everything becomes a bet, the quiet death of altcoins and rise of the speculation economy. Now, you've been hearing me rail about the problems with prediction markets for quite a while on this show, so I'll spare you talking about the Weimar Republic and what rampant speculation is a symptom of. TLDR, it means that people are desperate. They don't value their money. They don't think they can get ahead, so they take big bets because they don't care anymore or because they think that it's the only way they can catch up or get rich quick. But the more sinister side of this is what it's done to the crypto market. Now, I have long been a deep believer in things being built in crypto. I invested in hundreds of things. I told myself that it was the utility and the project and that it mattered. But it didn't matter what I thought because 99% of the other participants in the market were simply there to speculate. Crypto and altcoins were the world's greatest casino that anybody could join 24/7, 365 from anywhere in the world, effectively at any age. You didn't need to show your ID and fly out to Vegas to gamble. You could buy your favorite altcoin. Now, the worst representation of that was the rise, of course, of meme coins, and then the Trump meme coin putting in the top, in my opinion, forever for the meme coin market. You don't get much bigger than the President of the United States, the most powerful person in the world, launching a token on a Friday night. So what's happened here, and what I wrote this article about, and what I've been talking about for a very long time, is that prediction markets became the superior casino. You can now gamble not just on what your meme coin or frog or dog token is going to do, but you can gamble on the weather tomorrow, whether Kevin Warsh will get confirmed, literally anything in real time, soon with perpetual swaps and high leverage. So why, pray tell, would you go speculate in the crypto casino if you can bet on things that you know where you feel like you have more edge? I was way ahead of this trend. I think this is a big problem for the altcoin market writ large. That said, the silver lining is that there are some altcoins have proven to have real utility and value, and many that have been adopted by institutions. And I think that those will stand outside, aside from the pack, and will continue to do exceptionally well when the bull market returns. But yes, we thought that altcoins were the casino, but it turns out that the casino killed altcoins. And speaking of things that you shouldn't be able to bet on, but you can, next story. Clarity Act signed into law, but in 2026, 46% chance right now. So I hate to keep talking about the timeline of the Clarity Act, but it's hard not to, because Bernie Moreno just came out and said that it has to be done by the end of May. There's a recess obviously coming in on May, I believe it's the 21st, when Memorial Day, and that's it. Our kindergarten senators get to take the summer off. They don't have to work this summer, and when they come back, their job in Congress, largely, and some senators, is to raise money and get reelected. So they've gone on to say that this will be tabled indefinitely if we do not see it done by May, which is literally impossible, and I will tell you why. It's for this reason right here. Now, ethics concerns could tank the Clarity Act. No shit. I've been saying this for literally months as well. I guess I get to do my second dunk in the dunk contest, because it's been driving me absolutely insane watching the crypto media and the mainstream media and everybody get this story wrong, talking about how stablecoin yield was the reason that the Clarity Act was not going to pass. And I've just kept screaming from any mountaintop that anyone would listen that the real story is the ethics concerns. Democrats are not going to sign into law a bill that allows Donald Trump and his family to launch meme coins and to extract maximum value from DeFi. There will be a clause that says that cannot be done. Now, I also don't think that Nancy Pelosi and her friends should be able to trade stocks on inside information, but that doesn't mean that all of those things need to be in one single bill. The ethics clause is going to kill this, because Donald Trump is never going to sign a bill that prevents him from enriching himself in the crypto industry. And it's not only Democrats now. The real update is that Tillis from North Carolina, who is a Republican, who has somehow found his way in the middle of the Clarity Act debate, the Fed Warsh chair confirmation. This guy has found his way to being the bridge to things getting done or not getting done many times. But he has said that he will side with the Democrats already on the ethics clause, and they need Democrats and Tillis to get this done. I still say this is dead in the water. That 46% bet looks like free money. And oh, by the way, in case you're wondering, Senator Tillis is from the great state of North Carolina, and the North Carolina Bankers Association called Senator Tillis directly to oppose stablecoin yield compromise. So he also, because his constituent banks are afraid of capital flight due to a better technology called stablecoins, cannot afford to vote for this. Why? Because he would probably just lose his job, because we can presume that the bank lobby likes to fund politicians. Clarity Act is broken. I think it's probably dead, even from the best efforts. And anyone who's saying 98% chance this gets done in 2 weeks, or mark up by April 27th last year, they're not telling you the truth. They're simply telling you what you want to hear. Now, we have another story that's been developing. I told you, obviously, about the Kelp DAO hack and the problems that are happening in DeFi. Well, the crypto industry is coming up with a response right now. Here's the headline article. Industry leaders are pouring hundreds of millions into a rescue plan for Aave users after massive crypto hack. So just to give you the review very quickly, there was a massive hack of Kelp DAO. But what the hacker did this time that was novel is they didn't just cash out the assets, they used them to get a loan, causing toxic debt in DeFi. Roughly, we can call it a $200 million hole. And this caused $10 billion of capital flight. Well, I'm old enough to remember when Bitcoiners and crypto advocates and those who built DeFi believed in free markets and thought that zombie companies were never too big to fail. They believed that in 2008, TARP should not have existed, and AIG and Goldman Sachs and all of those should have failed. But now we're getting a massive bailout from the crypto industry. Now, this is different than TARP. You can see it here. DeFi United, a recovery fund spearheaded by Aave after the Kelp DAO exploit, has raised $303 million in commitments from across the ecosystem to make affected RS-ETH holders whole. So on the one hand, it's very good. Everybody's stepping in to protect these holders. I think we can all cheer for that. Also, to say that this is just $303 million in donations is wrong. The largest chunk is actually tokens that were frozen from the hack. So those were the hacked tokens that were never able to be cashed out. Those are coming back. But we do have individuals like Stani, the co-founder of Aave, or the founder of Aave, giving millions of dollars himself, much like Warren Buffett put $5 billion into Goldman Sachs and $5 billion into Bank of America back in the 2008 crisis. And plenty of others coming in to lend a hand to make this happen, some in the form of loans. So it really leads to a major sort of existential crisis, in my opinion, for DeFi. Should these companies fail because of this exploit, or should everybody step in and help? So this isn't like TARP. That's lazy, because TARP was basically forced. They put everyone in a room, put a gun to their heads, and said, you will participate in this. This is actually more like JP Morgan in 1907 during the bank panic, when JP Morgan himself, the actual JP Morgan, gathered all the bankers into a room and said, we are collectively going to bail out the system because we need to. Crazy, crazy times in DeFi right now. We're going to keep unpacking this story. Now, one more story I want to get to before the show is over. We have Paul Tudor Jones going on a podcast this week and saying that Bitcoin is the best inflation hedge. Let's see what he had to say. We got a video right here.
In the case of the two-year rates in 22, we had way too much fiscal stimulus. And then Powell, he overstayed being easy way too long because he wanted Biden to reappoint him. And then in 2020, when you saw, again, all the interventions, both by the central bank and the Treasury, you just knew that the inflation trades were going to take off. And what was, of all of them, what was the best one? At that point in time, it was Bitcoin. Bitcoin is unequivocally the best inflation hedge that there is, more than gold.
Bitcoin is unequivocally the best inflation hedge that there is, more than gold. Now, Paul Tudor Jones famously jumped into Bitcoin in 2020, 2021 cycle. He called it the fastest horse in the race. Many view this as a catalyst to that entire bull market. But this is one of the most brilliant hedge fund managers on the planet telling you that Bitcoin is unequivocally the best inflation hedge that there is. He points to the $21 million hard cap versus gold's 2% annual inflation via mining. He warned, obviously, that the S&P is dangerously close to a crash, that market cap to GDP is 252%, absolutely screaming. Dot-com peak was 270%. But he's right. And what I find interesting here is not only is he saying that Bitcoin is the best hedge, he's saying that stocks could crash and Bitcoin could go up in that environment. Most people view Bitcoin as a risk-on asset that will crash alongside everything else. I would like to remind you, though, of what happened in 2020. We had COVID, obviously, and in March of 2020, Bitcoin dropped below $4,000 13 days before the stock market itself found a bottom in the COVID crash. What happened after? The stock market roughly doubled, and Bitcoin went up 17 times. So even if you see Bitcoin collapse next to the stock market temporarily, what asset do you want to be in back on the way up? I'm in the Paul Tudor Jones camp right now that Bitcoin is the best asset that you can personally buy right now. Not financial advice. So yes, we have Fed Chairman Warsh coming in right now. Obviously, Robinhood suffering from a lack of crypto trading, but making up the hole with prediction markets, which I believe is a sign of the end times, with people gambling on literally everything. Meanwhile, you can just buy Bitcoin like Paul Tudor Jones says. That's all I've got for you today. We'll be back tomorrow with the next Daily Wolf.